CMHC has just released its most recent Canadian housing market assessment, and they've elevated a few cities to higher levels of vulnerability, but it might not be the cities that you would be expecting. I've read the entire report, and I'm going to go through all the different cities that I cover in my Canadian real estate market update and show you what CMHC has to say about those housing markets. Hey everyone, welcome back to another episode of All Prairie Real Estate. If you're new here, my name is Matthew Pfeiffer. I'm a real estate agent from Regina, Saskatchewan, and I like educating you all about Canadian real estate. I do monthly Canadian housing market updates and then weekly videos all about the process of buying and selling a house in Canada. So if you like that type of thing, go ahead, hit the subscribe button right now so you don't miss any future updates of mine, and go ahead, hit that like button if you think this is a good video, so we can share it out to more people and we can educate more people about Canadian real estate. On this episode of All Prairie Real Estate, we're talking about the just released CMHC Canadian Housing Market Assessment. So they go and they evaluate all these different Canadian cities to the degree of vulnerability they have to a significant market correction, much like we've seen in the 1990s in the Toronto real estate market. So what they're going to look at is, do the economic fundamentals in their mind make sense to the realities of the pricing in those respective Canadian real estate markets? Now remember, CMHC has been really pessimistic about the Canadian real estate market for about 8 months now. Ever since the pandemic started, they've been very negative. Now they've walked back some of their initial assessments, but they still stick to a premise that we're going to see a price correction in the Canadian real estate market. So understand that going into this assessment, that's kind of the framework that they're coming from. So we're going to start at the national level first, go through the quick overview there and explain their metrics. And then we're going to break out all the different Canadian real estate markets that I cover in my Canadian real estate market update, which if you haven't checked it out, right here is the most recent Canadian real estate market update that I have done. You should take a look at that one as well. But as always, let's start this off with another one of my terrible jokes. This one is a little bit of a nerdy one. Why is it that math textbooks are always seeming so grumpy? It's because all they are is full of problems. If you got a great joke, put it in the comments below. Okay, before we get into each individual city, let's look at the national overview and look at the 4 different major categories that CMHC looks at, as well as the overall assessments. You understand their methodology going into individual cities. First off, you've got is overheating. Are we seeing prices accelerate faster than the economic conditions should support? What about price acceleration? Are we seeing prices ramp up? Next category is overvaluation. Are properties being sold for higher values than the economic conditions should support? And then the last category they've got is overbuilding. Are there too many properties being built for the number of buyers out there? And that leads to the overall assessment. And they've got 3 categories that they have here: low degree of vulnerability, moderate degree of vulnerability, and a high degree of vulnerability. Looking nationally, you can see their stats show that overheating is at a low degree of vulnerability. Price acceleration is also at a low degree of vulnerability. Their overvaluation, though, they're showing a moderate degree of vulnerability there. And overbuilding is also at a low degree of vulnerability. That leads to the overall score of a moderate degree of vulnerability. So that's the national look. Let's jump into the individual cities now. In Victoria, you're going to see that this quarter's report is identical to last quarter's report, basically. Overheating remained at low vulnerability. Price acceleration remained at low vulnerability. Overvaluation continued to stay at a moderate level of vulnerability, while overbuilding also was a low degree of vulnerability, and their overall assessment continues to remain at moderate. Really what they're saying here is they're kind of concerned about, of course, the economic situation, unemployment, and price appreciation, maybe not matching up with some of those economic factors. They're kind of a sit tight right now. They're going to monitor it in Victoria. Vancouver is one of the big 3 Canadian real estate markets, the other 2 being Toronto and Montreal. And it's interesting that they have the least concern about the Vancouver real estate market compared to those other 2. Let's quickly go through it. Same as their last quarter's report. Everything across the board is all the same. Overheating, low degree of vulnerability. Price acceleration, low degree of vulnerability. Overvaluation, low degree of vulnerability. Overbuilding, low degree of vulnerability. And then overall assessment continues to stay at a moderate degree of vulnerability. So I'm going to read exactly what they had to say here. With significant uncertainty about the underlying health of the housing market, we determine a moderate rating to be prudent. So all their metrics say low, but they're going to put it as a moderate degree of vulnerability. That's what they've got for Vancouver. Looking at Calgary, it's also the same as the quarter report from before. Overheating, low degree of vulnerability. Price acceleration at a low degree of vulnerability. The overvaluation, is also at a low degree of vulnerability. Overbuilding is at a moderate degree of vulnerability. And their concern with the Calgary real estate market is, of course, lower demand from a tougher economic situation due to the pandemic, as well as the energy sector, less demand there for employment. So that's what their thoughts are for the city of Calgary. If you're watching this all the way through, you're probably thinking this is like a broken record because everything is the same as before, and Edmonton is no different. Overheating, low degree of vulnerability. Price acceleration, low degree of vulnerability. Overvaluation, low degree of vulnerability. Overbuilding at a moderate degree of vulnerability. And the overall assessment is a low degree of vulnerability. Much like Calgary, the lower demand caused by the current economic situation in Alberta is why they've given Edmonton specifically the rankings that they have. Saskatoon, it's green across the board. Low degrees of vulnerability and overheating, price acceleration, overvaluation, overbuilding, and their overall assessment, all low degrees of vulnerability. It is a little interesting seeing as Saskatoon has seen a fairly significant recovery in both sales and prices this year, but they're still in a low degree of vulnerability. That's what we got for Saskatoon. Okay, best city in Canada, Regina, Saskatchewan. This is how they've got it. Overheating, low degree of vulnerability. Price acceleration, low degree of vulnerability. But overvaluation went from low to a moderate degree of vulnerability. Overbuilding remained at that moderate degree of vulnerability. And overall assessment dropped from low to moderate degrees of vulnerability. So that's a little interesting. Much like Saskatoon, Regina has seen a fairly significant market recovery with both prices and sales starting to rebound. But CMHC doesn't seem to think that's going to last in the city of Regina. Winnipeg, you finally got it right. Green is the color in Winnipeg. They're green across the board there. Overheating, price acceleration, overvaluation, overbuilding, overall assessment, all now at low degrees of vulnerability. Overbuilding had actually been a moderate degree in their last report. That's been dropped now to a low degree of vulnerability. So Winnipeg, you finally got it right and you're in the green across the board. But we are again seeing a fairly hot market. Prices have been really appreciating in Winnipeg. Sales have been very strong. Inventory has been really low. So this is an interesting take that CMHC's got on the Winnipeg real estate market. In the biggest real estate market in Canada, Toronto, they're also the same as they were the quarter report before. Overheating, low degree of vulnerability. Price acceleration, low degree of vulnerability. Overvaluation, low degree of vulnerability. Overbuilding, low degree of vulnerability, but the overall assessment continues to stay at moderate. So I always find this interesting. This is the same as last time I did this, where Toronto across the board, low degrees of vulnerability, and then they throw in the overall assessment as moderate. So none of their metrics say that they should be in the moderate category, but that's where they've put it. They do talk about how there is some weakness in that rental market, and that is obviously going to cause some negative pressure for that segment. But the single family home market, especially in the surrounding areas around Toronto, has been very, very strong. In Ottawa, we're seeing overheating is a moderate degree of vulnerability. Price acceleration is a moderate degree of vulnerability. Overvaluation is at a low degree of vulnerability, as well as overbuilding, and then their overall assessment is also at a moderate degree of vulnerability. If you look at the chart here for overheating, you can see how much the Ottawa market has increased the past few years. They've really seen a boom in Ottawa, especially with prices overall continuing to increase in the nation's capital. Montreal was the only other city in Canada besides Regina that I cover that had a change in the overall assessment. So let's go through it. Overheating, moderate degree of vulnerability. Price acceleration, moderate degree of vulnerability. Overvaluation is at a low degree of vulnerability. Overbuilding is a low degree of vulnerability, but overall assessment, as you can see, has gone from low to a moderate degree of vulnerability. Montreal has been one of Canada's hottest markets for a number of years now. Of course, that's caused some concern with how hot that market's gotten, but I don't think that's going to change anytime soon. There's a lot of demand there and not a lot of supply. Last, but definitely not least of all the cities that I cover, the Halifax real estate market, which has been kind of that sleeper hot market in Canada I've been talking about for quite a while. Overheating, low degree of vulnerability. Price acceleration, low degree of vulnerability. Overvaluation remains at that moderate degree of vulnerability. Overbuilding is at the low degree of vulnerability, and the overall assessment continues to remain at moderate. There's been a lot of really strong demand for quite a number of years now in Halifax. The number of listings has continued to drop and demand continues to be strong, and that's part of what's pushed up prices across Halifax. So what do you guys think? CMHC has been ringing the alarm bells for quite a while now on the Canadian real estate market, talking about a significant price correction, and we have not seen that yet. They've walked back some of those predictions that they've made earlier in 2020, now just saying that they still see a price correction coming, but they're not putting timelines like they originally did. The 9 to 18% price correction they started with has been walked back to more like 7 to 10% with no timeline on it. So what do you guys think? Are we going to see in these markets a significant correction? I'm talking 10 to 20% in a very short period of time, a year or less type of thing. What do you guys think? Let me know in the comments below. If you want to know more about the Canadian real estate market, I'm going to put up my most recent Canadian real estate market update there so you can check that out. If you want to know about real estate in 2 minutes or less, here is 2 Minute Tuesday, where I cover one topic in 2 minutes or less. As always, guys, thanks very much for watching.